All right, so this is Sunday, recording the session, and we were just recapping the fact that last week the Bears lost an opportunity to put away the Bulls. They had them against the ropes on Friday, and they let them off. The market closed mixed up. I think the QQQ may have been red. Overall, the week was not bad. In fact, the Dow was green. The other candles were not bad. And this is just the overall S&P look. If I gave you this chart and I didn't say what it was, you wouldn't ask what's going on. It's just price action. So if I looked at a weekly, that candle is not necessarily bearish. And we may be rounding the bottom of this dip. So this is the overall perspective. We can have just as much opportunity to go up than down. Now I have a few concerns that have surfaced for me personally in the last couple of weeks, which mainly was the report from some growth companies that are not delivering growth. The king of growth is Amazon. 2 quarters back to back, single digits, I think. At least the last one was single digits for sure. I thought the one before it as well. And 2 shrinking quarterly sales reports from Facebook, the company with almost 4 billion people. No sheet, Echo. I'm sorry, I did not have time. It takes 4 hours and I just ran out. So the idea is that I'm a little bit cautious. I think Powell may have actually damaged the economy beyond what the reports are showing. Not beyond repair, just beyond what the reports are showing. That's my overall perspective. So what is that? I can go long. I think upside is still the better way to go without new news. Balloons or not balloons. We'll see how we open Sunday night, because we had some headlines about flying objects that are cylindrical and whatever. I mean, how scary stuff is that? And we don't know who they are, how many, what? What is this, a movie? So that should rattle people on Sunday night. If they don't, then maybe there's some short-term upside just from the gumption that the markets have. So I won't fight the trend. I'm just aware of the potential downside. So this is Apple, the king of stocks. You can visually see it. These are weekly candles, big picture. So not too long ago in October, it went to here and it failed. This was a place from which it failed. I know, Gint, this one is dear to your heart. So this here is not an obvious entry point, whereas a small dip, even into the 40s, low 40s, would be okay. It wouldn't change anything. We fell, we rallied, we fell, we rallied, and we're trying to bottom. Now, if we lose this one, Apple will come down to here like Tesla and all of the rest. You remember I said not too long ago, it needs to be above 133, 135, and it did it in big way. So now if it comes back and for some whacked out reason loses this, which is not like we have many alarms before that, but the big picture, if it loses this, we will come down to here and the SPX will be in the low 3s or below 3. That's not my forecast, but that is a forecast that exists. So if we go to shorter time frame on Apple, you can see that they are buying dips. So I will be in that mode until that changes. We have a line at 157 and a zone around 142, both of which should be difficult. So if we fall into 142, the right thing to do is to get long for a swing trade and see if we can come up to 152 and meander back up to here. So this is your battle zone, 57 to 42-ish, with a resting zone around 46. There should be some buyers here. There are buyers here. 46 is more. 42 should be much stronger. And if it ever comes down below 140 again, I will go long in size with stops because of that disaster scenario. So that's Apple. Nothing going on with it. AbbVie, this is not an obvious entry point if we go at the daily. So it hit both of targets. This was target 2 on this harmonic red thing. Target 1 was here. So they're ping-ponging in between 2 Fibonacci levels that the machines are seeing. I'm not making this stuff up. They saw this pattern, they went for target 1 and 2, bounced off of target 2 perfectly, and now they're struggling with target 1. So it is a significant lever to machines, and machines control action. So I think 154 is a lot of resistance. So if I wanted to go long AbbVie, I would go long on a dip into 146 and see if this is support. If I haven't gotten out of AbbVie, it's too late to panic. Airbnb is, look, that same pattern, and they're going towards target 1. Target 2 is here. I don't think that comes. But, hey, earnings are coming. So I will not trade AbbVie into earnings. Airbnb into earnings. The company's fine. The P&L is fine. They grow fast and all of that. But you can't trust the earnings reactions. They are short-term coin flips. A hard lesson to get through to people. Trust me when I tell you it's mathematically proven that the reaction short-term, like the next open, is not about quality of report, bad or good. It doesn't matter as much as what are people expecting. So let's look back. This was a dip. This was a rip. This was a dip. And this was a pop and a dip. So you can see it's 50-50 at best. And it's unpredictable. I'm pretty sure the company perspective did not go that bad, that good, that bad. It's just perspective. Like, what are people expecting? I don't know what this is. Arbor Realty, not an obvious entry point, although it's falling into support at 14. I think it's better support lower. So see what it does at 1480 versus 1430. I think if it loses 1430, it comes to 13.6. That would be the entry opportunity down here for me. ADS. Oh, this Adidas. Is that liquid enough to trade? Look at the size of the volume here. Holy moly. Okay, so if you assume that there's an ascending channel here, you can buy dips inside that channel. So there should be buyers into 120. 160 will be hard to take out, but if you do take it out, you go to 190. So buying calls, I don't know if it has calls. Buying shares, I would take partial position at best. Not an obvious entry point. Closer to 26 maybe. Anything below 24 definitely. Big gap. Not necessarily I want the gap, but this harmonic targets is 1 and 2. So 22 would be for me if I were to trade this stock and if I liked it. Versus 38. You get above 38, then you can take off. But right now you have to look down to find support. Affirm. I think that's what happened to Affirm. Okay, so I sold naked puts in Affirm. What, you crazy fool? Yeah, I said I'll buy it at 10.50 in the next, 30 days? So in the next 30 days, I may be the proud owner of the stock at 10.50 and I'll break even just under 10. If you sell what I sold now, you will probably collect a little bit more than me. What does that mean? It means I don't anticipate a disaster on an ongoing basis from this company. It rallied, 150, 160%. It gave up more than 50, which is a lot. I think this drop sliced through to 50% because of emotions. They grew sales. People were upset with earnings, which is profitability, but this is a growth company. So the company said, okay, we'll focus on earnings. So it said what Wall Street wanted to hear. I think it's a mistake if they actually do, but hey, they know their business, not me. I'm just trading the price action. I think I wouldn't mind owning shares for the long term. AIG, not an obvious entry point into 62, 63. That is a zone of rejection. So I would buy it into 58.5 and stop out below 58.2 because it could go to 53.5. Not an entry point, better entry point, stop out below here because it could go to here. Simple. Okay. All right. So 250 should be a support zone. So they have an opportunity to hold 260. They're going to battle for a lot of sellers at 280. This is the highest point of control. That is the highest volume. This is the spot where both bulls and bears love it the most in this period of time. 280. So going into it is going to be difficult. You take out this, you can get to here. But it's not so obvious. So if this is liquid, I would be more enticed to sell puts or put spreads rather than buy calls. Buying shares is okay, but not all in. AMD, I would like it lower, like 76 or 74. Then at least I'm buying into this cluster. What is this? Why do they always do that with AMD? Yeah, I won't touch it here. Too high. And NVIDIA got up to its nasty neckline, the weekly neckline. This one is not even within $20 of it right now. So it's relatively weaker than NVIDIA. I wouldn't touch it for a short-term trade. Amazon, I would touch it because it has rallied a lot, shed a lot, but somewhere in the middle lies the truth, and there are a whole bunch of buyers here. So if I have a credit put spread, and I do, I think it's somewhere around 89, I'm not defending it yet. I feel like I can deal with the pressure if it comes later. So AOSL, on the daily basis, it looks like it's in a base zone. So from that perspective, yeah, I can trade it on the long side with stops. I don't know what lies below here. I don't really know their business. I think they're testing for semiconductor. So that industry changes pretty quickly. So Mr. Semi, are you here? Maybe you can tell us. Find out exactly what's going on in their business. Technically, this is support, but if it loses this, 27.50, I would get out. So not to find out what's below, you know. That's a giant Head and Shoulders that says $12 is likely if we lose this, but it's not likely. It's feasible, but it's not likely. Okay, this one, is this the one? No, that's apps. So on a weekly basis, they're selling rallies inside this little segment right there. So you have to respect that behavior, and they're at the upper end of the rally. So let's go in closer in time to see how we can deal with this. So that's that channel I just drew. So you can see there are sellers at 44 and sellers at 46.5-ish, and buyers into 36. So you're going to ping pong inside that zone until they decide they want to take this out. If so, then you challenge the upper end of that channel. Otherwise, I will assume they're going to drift lower, probably to 36. Try to take it there. Apps, I wouldn't touch it. Sales shrunk 25%. No. Between this and Amazon, I'll take Amazon any day. Between this and Affirm, I'll take Affirm. Affirm grew sales 10%. This one shrunk 25%. You can fix profitability. Affirm's complaint. You can't fix the lack of sales as easily. Profitability, you just turn off the waste, you fixed it. With sales, how do you bring in an influx of sales? You can't. I wouldn't touch it. If I'm stuck long it, I would stop up below this for sure. If I want to gamble on it, fine. Just know that the sales picture might be ugly. ARC-F, still too high, closer to 16.5. I'll be a player. Something going on with banks, and if this is really a bunch of banks, I don't know what's in ARC-F. It's finances, but financials, but I don't know what she has in there. So find out and see if you want to participate in those companies. From that perspective, it's falling into the 50% of that rally, but man, that was a violent rally. Whoo! Shoot, 56%. This is halfway. Let's say they overshoot because they overshot. So 16 would be interesting. And look, I have an alert at 16. All right. I don't know this one. Not an obvious entry point, maybe closer to 174. You can see it's falling into support. You can see it's struggling with prior fails. So they're going to ping pong in here, hopefully to take this out and get to here. Otherwise, they could fall to anything below 172.5 is interesting. Anything into that yellow line. It's been consolidated well. Shortable. I put a note to myself, maybe I want to pick a fight with it by selling a credit call spread up here somewhere. It's on my list of shorts. If I'm long, I'm out. If I'm looking to get long, no way. Maybe closer to 160. What? Yeah, look at this gap right there. What the hell is this? So come down and take out some weak hands. People who bought it here will sell at a blink of an eye. BAC, it's not an obvious short, but it's definitely not an obvious long. And if you can see, it's forming a Head and Shoulders. Maybe it does, maybe it doesn't. So I'm looking out for the future price action that maybe right now they're drawing a shoulder. And if so, the downside scenario would be I'm going to be generous. It's a little bit more than this. So this is potential. Sellers, I know for a fact, into 36.5. They can negate this by making a higher high. I'll be long down here. I would try longs down there, not myself. Okay, so I just spent some time on this one. Be careful. I looked at the cash from operations in this TradingView website, and they don't match. I would think that the cash from operations in this statement, if I go to annual, what? This is now different than earlier today. Yeah, there's something going on. So do your homework. Okay, so you can catch the falling knife into support if you can verify that they're not bleeding cash. What I want to know is that the cash from their operations is not negative. because if it is, that means they're spending a lot and they're borrowing to do it. Whereas Palantir spends a lot, Twilio spends a lot, but they don't borrow to do it. They spend all the money they make. So verify that fact. If so, then you can be long with an extremely tight stop. I think you have a buyer at 90, but below that, I don't know what's going on. So if you caught the falling knife, that's fine. Make sure you stop out if you're wrong. And definitely don't add. This one is not an obvious entry point. Maybe closer to 31.5, maybe 31. And oh my goodness. All right, so there's a gap up here. Maybe they want to go there, but it's still not an obvious entry point. Somebody will say, oh, it's a giant cup and handle here. Yep, it is. But for me, I would rather buy it on dips rather than chase the rip. So I waited this long. I missed it. I should wait for dips. BX, you know what I've done with it. I shorted it and it paid us a lot. I recommended buying a put for $4, and yesterday it was, I don't know, 5.6, or this week, or a call spread. So I think it goes much lower. But if I made my money from shorting it, I would get out. This is not an obvious entry point. All of these sellers are waiting right here. So what may happen is this will fail, and then they will finish the job. So if I still own my put, I can stay in it. This is how they do it. What I did is I drew this from here. I copied it and I said, let's move it back. 2-3 times that has happened, and this was the 3rd time or 5th time. So they run a lot and they fall a lot. I would imagine they get to 85, but I would have closed my short. You don't have to, but you can scalp a win. Why not? Cardinal Health. I also just added it to potential shorts with an extremely fast stop. So it's toppy inside of I think they call this a flag. So this box is an actionable box. So you have a seller and a buyer. So if you want to trade the box, you buy puts here, you buy calls in the lower half, you buy puts here, you buy calls in the lower half. If they take this out, they go to 90. So however you short it, make sure to exit if it doesn't happen. Or let's say I risk $1,000 on puts. I can spend $100 on a debit call spread. So this way, if a huge pop, it will give me most of my investment back. So this way you take a position, real-time cooking the book. You can take a position and have it hedged in case you're completely wrong. That's how I would do it. CCU, most definitely not an obvious entry point. What is this? Incredible rally into a prior fail. If I buy something here, I'm telling this person, I got you, let me carry your bag of garbage while you go rest. Enter in here. If you waited this long, you missed it. Clover. I'm all in. My entire fortune is in Clover. No, I own some stocks because of one thing and one thing only. Is it fake or is it not fake? I don't think it's fake. It's got a P&L. It reports to the government. It works with the government. It's not fake. So that's my thesis. Maybe it falls back to 90 cents. I'll double my position. So here's the story. I entered somewhere up here. It fell down to here, somewhere above here. Partial position. It fell below 90 cents. I doubled my position. Still a partial position. And now I'm greenish. I was greenish this week at one point or another. If it falls back to 90, I will add more to come into almost my full position, and then I'll sit on them for a long time. So I'm not doing anything. Somebody mentioned that they're buying calls for the earnings. You're doing what I'm doing. I'm doing it with shares. It's $1 for crying out loud. Why would you want to mess with calls? How much are the calls? 80 cents? This is $1. And there's no time element. You can just sit on them. Anything below $3, I wouldn't even use options. I would just buy the stock itself. So doable with options, but why put the element of time in there? Okay, vulnerable and hit the vulnerability. Who is this? It is now. Okay, so I was right about this, but now maybe I'm right about the fact that rallies will find sellers. So is it going to do this? Now that this happened, the rallies will find sellers. I'm almost guaranteeing you that. Whether the sellers are strong enough to come back down and lose where they bounced from. And guess what? They'll be head and shoulders, target around here somewhere. So for me, 36 or lower, it will be interesting to reload long. CNC, I wouldn't touch it. Centene. That's a Kramer fave of old. Short term, the Bears are winning and they just lost a footing. So now if they come back to 76, I think they will lose it and come back to 64. So do your homework on the company. Make sure you're trading it with the proper time frame. On a daily chart, it looks happy. It looks like it can go to 80. I think it can go to 76 and then get tested really hard. So if you're long, you're fine. Just know that if you get to 76, I would trim because you might have a dip. And if they take that out, then okay, they can go to 80 in the next, I don't know, 2 months. I mean, it has support, but they lost the neckline. And the rallies, you can see it. It wants to come down in a descending channel like Tesla. And if I were to like loosely interpret this head and shoulders, the target is here as big as this. Let's give it a partial target. This could be happening. I'll make it white so to match the descending channel. So this descending channel they might be in. May have lost neckline here. Now the green thing says we go to here. All right, a CrowdStrike. I haven't looked at it. I don't remember. Okay, so they're buying dips now. You should ask yourself, bulls, are we in a buy to dip mode? If so, then there should be buyers in here above 106. Now you have to pay attention. If we fail at 116, then they're probably going to lose this and come back down to 102 or 100. It would be an entry point. I wouldn't mind it. So I'm going to put an alert down here. But they look like they're buying dips, so maybe they'll buy the next dip here. Next here. You know, they're buying dips. I don't know how deep this will go. Cisco. Boring company. Why is the stock not so boring? That's crazy. It's a dinosaur. It's a survivor from the .com. Looks like trade this box. Buy, call, get long in this lower half, exit in the upper half. So if you were long here, fine. You're going to have sellers at 48. And careful if you lose this one. You could open a trapdoor. How deep? I'm not sure. Probably not too deep. It's a boring company. Nothing wrong with it. CTRA, not an obvious entry point, but if you took longs here, I would trim and see if they can take that out to 2750. This was support. Sellers in here now because they lost it. And buyers. So you have a tight battle. Let's see who wins it. CVS, I had a couple people talk to me about it. If you're not long yet and you're just piling into long, you're chasing a rally of 7%. 92, look at this. A lot of sellers in here. Not an obvious entry point on that perspective. So buy the dip is better. The lower it gets, the closer to 88, the better. Yeah, a buy the dip mode for sure. I don't want them to fill all of this gap because they have all of this action above it. So the closer to 88, the better. It might not be surgically accurate, but it's much better than this jumping in. Ooh, DAL. I wanted to short it and I didn't. I should have. Okay, so it's starting to fall into the path that I thought was available. I wouldn't touch it unless it gets down below 36.50 personally. It may have buyers, but I think that it has sellers as well. I think it's starting to do a descending channel to fulfill a weak spot in the chart here somewhere. There are buyers for sure. So the closer to 37.50, the better. So it's right there. It's right there. But those are airlines, so I'm not a fan. I don't know what that is. Yikes. Okay, so if you believe in the company, you can hold calls with an extremely tight stop. I don't know what's below, and it could explode higher, so I don't want to keep you out of it. What is this? Managed futures strategy. Whoa, that is definitely above my pay grade. I have no idea what this is. So anyway, what it is, it's a descending wedge full of energy, ready to explode. Up or down, I have no clue. So whatever you do, real time, okay, whatever you do, make sure you know what that is and how much money you're risking. Datadog, I believe, has earnings, so it's a coin flip this week. If technically, if they take this out, they get to over 100, so it's worth a long. The bulls are buying dips, ascending channel, challenging prior fail, big prior fail. Worth a long if you're long, worth a trim if you're long. So don't leave everything on the line. Just take off something, or buy some puts to protect, or sell some covered calls or something. But you have the upper hand. Disney was a short. My interpretation of the Disney earnings options was that, minus that extra burp that they had up there. I said it had resistance and it's easier to fall. And then they had that extra burst, which was from words from Bob Iger, promises that may or may not hold water. Just complete BS. That's what I call vaporware. Oh, we're gonna ask the board to see if we can reinstate the dividend, and then it took that extra leg. If they can reinstate the dividend, it makes a difference, because a bunch of funds cannot own a stock unless it pays a dividend, and then it goes back into that basket. So then a bunch of funds will have to buy it. So anyway, I think rallies into 112 will find sellers. I would buy the dip closer to 100. Remember, that stock rallied a lot. Great company. Just give it time to breathe. And trade the box from earnings. The middle of the box is a problem for the bulls right now. Devon, I think this is happening. So we'll find out. I think Suncor reports this week. They might move in tandem. I don't know when Devon reports, but so far so good as far as my chart and the price behavior. Choppy in a bump to see if they come back and lose this. Why am I so bearish about oil? I told you, I think they're feeding us a lie. The world is feeding us a lie about the problem with supply and demand in oil. We have a ton of supply. We don't have exploding demand. We have okay demand. And it's a policy issue. So they can beat me with a policy. They can continue to lie and prove me wrong. So I'm not like shorting outright, but I don't want to chase it and be stuck. And if you're saying that the PE is cheap, you should know that it doesn't control the price of its commodities, nat gas and oil. Oh, by the way, I am long nat gas. So if I'm long nat gas and short this one, maybe I'm balanced. How am I long nat gas? I sold a naked put in UNG for Bill. Bill, you here? You're welcome. So we'll see if I own. I sold it at 850. I'm at break even or profitable in it. So we'll see. EA Sports. Wow. Okay. Study the industry. This industry, I never trade it because it's so headline driven and out of the blue. I mean, it's a game changer. Remember Fortnite? It just crushed the industry. It changed how they make money. So if they lose this one, I can't tell you how low they go on EA. And they might explode higher based on some headline. Blah, 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 they released, blah, 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 and the teenagers love it. I have no idea. Study the industry. All I know is look at this, look at that. Pennies. You lose this one, she gone. It's probably 84 or 80 in 6 months. So be careful what you do with it. Don't short it based on that. You go long a stock into such a pivotal zone with stops. So if you're catching this falling knife and you understand the business, yes, that's how you do it. But you should also stop if you're wrong. This one is in the middle of a daily range. So if you caught the falling knife on this one from the chart itself, I don't know the business of Emerson anymore. You should also know that when it gets to 89 or 90, it's going to find sellers. So if you caught it $2-3 for a trade, I would start locking in profits. You should consider that if it doesn't get to 90, it's going to 78 or 76. What? Yeah. Look at the size of this inverse cup and handle or head and shoulders. If you can't see it, I'll show you the visual. If you want to consider the head and shoulders, this is it. If you want to consider it an inverse cup and handle, this will be it. Okay, so if they don't take this out, they will come back down and finish the job. Any which way you slice it, you have sellers, and if the sellers win the bump, they're going to go lower. All right. Enphase, not an obvious entry point, because I think technically it should go much lower. It should go to like 150, 170 maybe, 172. Again, I think they're selling pops. This was my target. Look at it. Boom, boom, twice. They're so close to it. And if they are selling rallies, they're going to easily lose this one. And the downside is horrendous, but I don't think so. There's a lot of buyers in here. So anywhere below 190 for me would be much better. Business is great. Products are great. It rallied too much. That's the problem. And it's just a chart thing, not a company thing. If I own shares, I'm probably not panicked. I would sell covered calls to put them to work. Okay. Did I pass the break? No. ET. Okay. I don't know this one. It looks like it's falling into a support zone. So if you bought the dip on Friday, you did okay. You should see how much resistance there is into 368 or higher. EQT. They're selling rallies. They're at target 1 for this green thing. I think there are a lot of sellers into 32.5. See what they do on the dip back into 30.5. Okay. They are selling rallies. And look, this rally, they sold it and they made a new low. This rally, they sold it and they made a new low. This rally, if they sell it, be open to a new low. I'm not saying they will. At some point they stop, but be open to it. Yes, most definitely be open to it. Okay. They're not done. So book your profits. If I was long off the low, I would book my profits completely. ESS, not an obvious entry point. See how they handled the 239 fail from last week. Otherwise, it might come down $10, $12. ET, last one on this video before we stop it and start the second video. Not an obvious entry point. I think if they lose this one, they come down to 12.4, 12.5, or even 12.2, which would be a much better entry point. What is this garbage? Anyway, is this a 9%? Oof. Yeah. I don't want to get you out on a 9% stock pair, but technically, if you're trading it, I think you will get better entry points. All right, so I'm going to stop this video right here and